Hello, folks. How are you? Long time no see. So, obviously, I've been a little under the weather here. Obviously, it's not COVID, it's not anything like that. I just have really bad back spasms and migraines sometimes, and I had a long bout of it. And it just, had a hard time getting through it. So, it is what it is. Hopefully, I've turned the corner and it will leave me alone for a little while. My back is still not 100% there, but I guess it never really will be after I put it through that motorcycle accident in 2009. It just progressively gets worse each year. All right, so again, this is our daily chart, dollar index. I'm a little bit out of practice. Admittedly, I had a little bit of. You listen to that? You hear that? We have thunderstorms coming through again. Keep me in prayer. Hopefully, we don't lose our power again, but if we do, I'm prepared. Thank God. All right, so like I said, I'm a little rusty being away from the markets. I don't feel plugged in. I watched this afternoon in the E-mini S&P, and some of the things I saw coming, some of the things I didn't expect it to go that far down. But we'll talk about that when we get into that part of the discussion. But all right, so we're looking at daily chart. We went up into the area I mentioned for you to study on a higher time frame, zoom out. And Thursday we made the high. Friday came off of that just a little bit, and today we returned back into consequent encroachment level between the 107.61 and 106.42 level. Admittedly, I think that we could potentially go down into this area here. Is it bad for the overall uptrend? I don't believe so. I think it would be probably a better thing for it to do that, to pick up more discount to go higher if it's going to do that. I don't know for certain it's going to do that, but we try to stay on the side of the higher time frame order flow, try not to pick tops and bottoms. So that's kind of like what I'm looking at here. We might trade down into this, and if we do, we'll have to measure whether or not there is any accumulation there and how it starts to deliver. But just watch this area in here. I don't have the levels on it, but it's this low, this high. And the hourly chart, looks like we could come down and clean up some of the sell side in here. And the imbalance is broken up on that daily chart a little bit more detailed here. It's two sections here. But watch this area in here overnight going into London. Euro dollar, small little gap in here. I mentioned if we get through that and come back down in, that might be a catalyst to send us up into here. So be mindful of that. Trying not to pick the bottom, but if we do go above here, find some support there, that would, in my mind, at least give us an opportunity to run up into the 103. I don't like the idea of it running straight to it. I'd prefer it go here, down into that, and then go there if it's going to do it at all, and it's assuming the dollar's going to fall. Euro dollar hourly chart. Okay, we had sell side here. Took that, rallied, shift in market structure here on today's trading. So we had a little bit of a return back into that here, then rallied up for buy side. There we have a buy side liquidity pool resting just above this high here, relative equal highs. So I have that noted on the chart. So just keep that in mind. Should we see that weakness in dollar, euro might want to pop up into that area. Additionally, you can probably hear the rain being driven against the window. I'm actually in my bedroom. I don't really ever film or record in this room. So I'm like on an exterior wall with a lot of windows. So you're going to hear a lot of the storm outside. But I'm not going to edit it out, and I'm not going to do the video over because I just don't want to do it. So I'll have to obviously endure it. But the euro, if we get weakness on the dollar, just be mindful of that level up here. And I mentioned that we would eventually get to parity on euro dollar, and we got that last week. So does it remain that way? I think personally there's a lot of things going forward that are going to be pressing the Eurozone and even the pound. And it's all Russian related. So I think you guys are going to probably have a really hard winter. So if you guys want to ignore what I'm going to say here, that's fine. But I think if you have the means to do so, try to stock up on whatever you can, because you're probably going to be in the thick of it. Alright, pound dollar, daily chart. Old imbalance in here. We have buy side. I don't have it noted because it's going to be too many levels on the chart. But we had a nice little run up in here intraday today. After taking sell side, we went down below that. Nice little snap above, short term, swing high. So we have a potential shift in market structure. I think personally that the pound, like I mentioned last time we spoke, I don't remember what day it was last week I did the discussion with y'all, but I think this one could act a little overzealous. There's a lot of things going on in the UK that, you know, your prime minister, the Brexit stuff, the laundry list of things I've gone through without going into a tinfoil hat discussion here. I'm trying not to do that. I just think that they could have a really good run up, and if it does, it could run up into this area here. But right now it has to contend with this. Okay, so just be mindful of that. I'm just thinking out loud. I know this probably may feel like I'm all over the place and not really nailing down any one particular direction, and that's the case. I don't have a directional bias that's perfect, that I'm comfortable with, because I've been away from the market for about a week and a half now. So I don't know what I'm looking for specifically, but I'll know it when I see it, that type of thing. So I'm kind of like thinking out loud and giving you a over-the-shoulder view of what I'm considering, what things I'm looking at and pondering. And it may not be beneficial to you, it may not be helpful to you, but if anything, let it do this. Let it comfort you. If you don't see something that's obvious in the charts, your teacher is having that same problem right now too. So don't be discouraged by it. All right, hourly chart here. Market had run above swing high here today. And once it rallied up, we had the discount low, the imbalance I mentioned on the daily chart. Here's the premium high. Consequent encroachment of that level here and here, midpoint, is just about where it traded to today. Just fell short of it and we broke lower. Watch this imbalance here tonight. It might drop down into that and get a little bit of a springboard run up into buy side liquidity here, maybe retest the premium high of that imbalance on the daily chart. If it goes through that, then obviously the levels I mentioned on the daily chart would be considered. E-mini S&P daily chart, you guys saw I did some work with that today. I mentioned on Twitter that I liked the idea of the buy side liquidity pools that were mentioned on my tweet. I was using that as a bias going in this morning, looking for some kind of continuation. I don't want to try to do too much here because that's what I'm going to be talking about primarily in the YouTube video. But I was looking for a potential run up into here, and we didn't get that obviously. But we're inside this large range, which unfortunately could potentially stay in this range for a little while. We're going into the slowest portion of the summer. Nothing really exciting except for geopolitical and that type of stuff. But we'll see what we get in terms of volatility later in the week. There isn't really a whole lot of drivers until the end of the week and Friday or such. But we have a couple of things that are really low end in terms of volatility. So it may be just treading water until we get to the end of the week. But on the hourly chart, you can see we had ran up in here. I was looking for potential run up into the 39.22 level. That's what I wanted to see it pop up into there. I would have accepted a retracement during lunch to take some kind of sell stops and then go for a run higher. That's what I went into the day with, that mindset, even though we've gone a lot from the last time we spoke. I mentioned we would see it likely drop down into this, drop down into there, and attack the relative equal highs here and trade for 38.80. We got that. Okay, it took today, obviously, or Sunday's trading really to do that. And then finally we had some acceleration on the upside. I felt that we were really winding up to just make a pop through that 39.22 level. And while I was engaged in the market, I knew, and I'm really going to really take away the thunder of the YouTube video if I say everything here, but I reversed, and I'll talk a little bit more about that in the YouTube video. But even though I knew that this was likely to trade back down into here in this little imbalance, this here was a whole lot more than I expected. So I'll talk a little bit more about that in the YouTube video, but watch this one tonight. We might get a little bit of a pop in here if it trades down into that. As long as we're above the discount low of this imbalance there, I'm looking for a potential run up and maybe eventually throughout the week trade up into that 39.22 level. If we trade below the fair value gap, I would treat that as resistance at 38.10 and see if it wants to sell off and consider this area again here with the imbalance. That's what I have for now. Nothing really solid, I know, but just again, thinking out loud, touching base with y'all. And I know some of you are growing a little bit impatient because you want to see the Model 13, the YouTube video model that I taught in the mentorship level. And as I mentioned, if you haven't been paying attention or been out of the loop, I haven't been feeling well. My intention was last weekend to sit down and draw it all up, get it all started, and also have the very first production episode of the Ends series I'm doing on YouTube. I was unable to do any of it. I didn't even do a video commentary for y'all for Sunday. I just wanted to feel good, and just not do anything, put anything more on my plate, because it was a rough week last week. Like I did not want to talk to people. I did not want to even deal with my own family. I was having a hard time coping. But now I'm feeling a little bit better, so I'm going to spend the evening tonight outlining the Model 13. I probably won't have it in production in your hot little hands until probably Wednesday. So that's probably where we're at in terms of the delivery schedule for that. And the series for YouTube probably won't have the first episode until Friday night at 10 o'clock. And the rest of the week I'll play it by ear, how we do commentaries and touch base on that front. I'll probably do short little videos and reviews on YouTube to kind of like keep myself plugged in and get back in the sync of things. So I don't feel in sync at all. I feel disconnected, and I need to get myself plugged in. So when I give commentaries and I give my analysis and I give my ideas about what I think is going to happen and review things, it helps me get back in sync, because right now I feel completely disjointed from it. So missed the wonderful afternoon session sell off. That was a pretty sizable run down from 38.95 down to, what is that, 38.25-ish, something to that effect. So I mean, that's 38.23 and a quarter. So yeah, it's a significant drop, but it is what it is. I can't catch them all, and I'm human. I'm feeling a little bit rusty, but it takes a couple of days and I'll get back in sync. And when I do, obviously it'll be easier for me to commit to what I think it's going to do, and then we'll get back into that. So I'll touch base with you later on in the week throughout via Twitter and or commentaries here. Until then, be safe.